Hey kid, come here. You want to learn about tax fraud? Good answer, because learning about tax fraud is cool. See, when it comes to taxes, there's two main components. There's your income, and then there's what we'll call reductions. These are like your deductions and write-offs, expenses, and credits. So we'll just kind of lump them all together. Now, when it comes to the actual physical actions of fraud, we can also group them into two categories. We can overinflate, or again, increase values more than reality, or we can do the exact opposite where we decrease. Now let's take this 2x2 matrix and let's start plotting some groups in here. So group A would probably be commonly referred to as the most obvious way of committing tax fraud. These are people who don't report all of their income. They're purposely deflating it. And this is going to be people who probably get paid side jobs in cash and they just don't report it. Or they are people who are going to take certain deductions and claim excess of it, or claim like credits they otherwise don't qualify for. Now, ultimately, the results from Group A is going to be pretty obvious. Again, if they lower their income and or increase their reductions, they're going to inherently pay less taxes. So again, if we're looking to evade, not pay taxes, you may fall into Group A. Which actually begs the question, what about Group B here, where they actually artificially inflate their income? So why on earth would Group B actually inflate their income? Well, it's obviously going to be opposite of Group A, where Group A actually got to pay less taxes. But here in Group B, they're going to pay more in taxes. That sounds stupid. Well, also keep in mind that tax returns aren't just used for, again, reconciling tax liabilities. It's also used for credit applications. So people can and will actually create false tax returns in order to get again, some sort of favorable loan or mortgage or whatever, again, from falsifying and increasing their income. Let's shift to Group C, because this one's a little bit of a misnomer. These are people who are going to actually report expenses that are not as much as they otherwise would be in reality. Now, that sounds pretty crazy, right? Again, if you're filing a tax return and you don't claim all the deductions and credits and expenses, write-offs, or whatever that you qualify for, that very well could be seen as a form of tax fraud. But full stop for a second. Just realize from a relative standpoint, the people in Group C, that's nowhere as extreme as fraud as from A or B standpoint. So again, if you are, running a business and your records are just pure trash and you don't really know what to write off, and so you purposely underreport your expenses, again, that could be seen as a type of fraud, even though you are going to end up paying more taxes. So ultimately, the goal is to understand the tax rules from your perspective, maybe get a good accountant, have good, record keeping and whatnot, and see what you actually qualify for. And if you qualify for it, take it. It's there for your advantage. So again, if you qualify for it, take it, and well, don't fall into Group C's trap.